Hello, today is Friday, the 9th of January 2009, and the market closed here. Obviously, we had a rough session here today. NASDAQ lost 69 cents or 2.24% as measured by the NASDAQ 100, the Qs here. We're still above the 20 and 50-day moving average, so all of the potential bullishness has not disappeared yet. We can see here on the 10-minute time frame that we're still holding around that 50% retracement level in the Qs, but the picture isn't quite as optimistic as I was hoping it would be. Yesterday I was saying that the market really the NASDAQ really needed to get back above this level here near about $30.85 to confirm what might be a potential bullish situation on the daily time frame. We still have that potential bullishness here as we see the market is still above the 10 or well it's above the 20 and 50-day moving average, and they're all stacked above each other 10, 20, 50. Obviously the weekly time frame remains a mess. We're seeing a little bit heavier volume here this week. We had a down week, and that relative to the the rally that we've seen here the last several weeks, the volume's been diminishing. Now we're seeing a heavier volume sell-off on the weekly time frame, so a lot of mixed signals. If the market is going to recover at all, basically I think that this is pretty much your line in the sand as far as any potential bullishness continues. So I don't think you should be long in here by any measure. The positions I was talking about, obviously all gone today. It remains a day trading environment basically, and today was a really choppy day in particular. We had the initial weakness, then just back and forth. Looked like it was going to get going in here, I was getting long in here, but you have to be able to move quickly. It made this lower high, then a lower low in here, back below VWAP, and then got smashed right at the close. So closing pretty close to the lows of the day. Again, on the 10-minute time frame, we're still not all the way broken here, but we have lower highs and lower lows, and that's the main thing to look at here, is that we have lower highs and lower lows on this 10-minute time frame, and that means that you just can't buy with any conviction in here. These 1-minute time frames, you can go in and buy for little scalps, but you just can't get too comfortable with a long position. So next week is going to be very important. Obviously, we've got options expiration on Friday, and we're back below a declining 5-day moving average, so that lowers the confidence a little bit further. You still need confirmation from price action before we can look at this thing as bullish. Yesterday, I realized that I said it's as bullish as it's looked in a while. Looking bullish and acting bullish are completely different things, because today, it failed basically, as I pointed out early on the blog. It failed to confirm above that level, and hopefully you caught that live intraday analysis as well that I had today. The oil market was down 83 cents on the USO. And looking at that Fibonacci in here, we broke back below it, and it's still trying to search for some support in here. It's not quite there yet. There's no reason to be a buyer in here. We've got these moving averages crossing, so maybe it's attempting to stabilize with a declining 5-day moving average. I would say you want to err to the side of caution. You want to wait for a similar situation where we can get above and hold above the 5-day moving average. The 5-day moving average starts advancing, and then the market makes these higher highs and higher lows. Right now, that's still looking like it's at least 2 to 3 days away before you can look for any potential rally in the oil market to hold. And of course, all these charts, the daily time frame, it's still badly broken below the 50-day moving average. We've seen huge volume in here recently, on the weekly time frames. This week was a really big volume week, biggest that the USO has seen, and it remains in a downtrend on the weekly time frame. This prior support, we'll see, will that become resistance if this market can rally up to 43? Well, 43 is a long distance off, so you can't really focus on those weekly time frames as much. You have to be looking at the daily time frames and saying, well, it's coming into an area where it may find support. Let's wait for the evidence before we purchase, and that evidence isn't there in oil. The evidence isn't there in the Qs. The evidence isn't there in the semiconductors or this market. We still have on the daily time frame here over the last month or so a series of higher highs and higher lows. But this could be a failed breakout. It could be a trap. It's something to be very serious about. Obviously, look at the news that we're experiencing with, jobless claims, worst numbers since 1946 or whatever. And it's hard to ignore dramatic headlines like that. But if the market rallies, then you've got to go with price action. But the price action isn't suggesting that it's time to buy. Here, the semiconductors just outlined there, these lower highs and lower lows. We've got a declining 5-day moving average. The recent level for this Fibonacci, we're basically right on it. It's a difficult environment. Today was, I thought, particularly choppy in all these markets. The SPY closing right basically at that 50-day moving average. Let's take a look here. Actually, the figure is 89.12. We closed 3 pennies below that. So that gets a lot of people's attention. Is it a shakeout below the 50-day moving average? Then we're going to miraculously recover. Well, when you look at the weekly time frame, it's tough to say. And this is what happens. This isn't textbook technical analysis. You don't have the luxury of just going back and choosing the stocks that fit a scenario. What's happening right now is there's a lot of indecision in the market, and when there's indecision like this, you have to trim your risk parameters by cutting down on position sizing, by being super vigilant about cutting your losses when you get involved. And even in here you can see we've got a declining 5-day moving average. That's the orange line right there. And odds just don't suggest favor a continued rally. Even as I was getting long in here this afternoon, because I thought, well, we broke above, we broke this support level. That support became resistance, and then we were breaking above it right here. So if we drill down to the 1-minute time frame, it looked like, well, hey, it's getting back above the daily VWAP. It's making these little higher highs and higher lows. Looks good for a trade. Then it made a lower high. It made a lower low. You got to get out of there really quickly, because then the larger term trends take over. And the longer term trend from a 1-minute perspective occurs on a 2-minute perspective, occurs on a 5-minute perspective, and on a 10-minute perspective. We have these lower highs and lower lows. We have a declining 5-day moving average, and on the daily time frame, we're at a very critical level where the market is searching for support. Again, looking at that, those Fibonacci levels. And the reason I look at Fibonacci levels is because a lot of people look at them and they tend to be a self-fulfilling prophecy. People, decide, well, I missed that beginning of the year rally. I'm going to wait for it to pull back 2/3, and I'm going to start sticking bids in there. For the people who got short up in here thinking, well, this rally is destined to fail, they start looking at the 2/3 retracement level and say, I'm going to start bidding for those shares back in here. So you have an increase in demand. You have a decrease in the supply, and the market starts to find support. Theoretically, what we have to do then is drill down to the shorter term time frame, like this 10-minute time frame, look for the evidence, and right now it's just not there yet. You cannot buy with any conviction. The path of least resistance remains lower on the 10-minute time frame, on the 1-minute time frame, on the 30-minute time frame, and these are just potential levels of support. So I hope I didn't throw anyone off guard by saying the market looks as good as it has in a while. Just again, looking good isn't good enough. You have to have price confirmation. This market, I said yesterday, needed to really clear above 92, and obviously, right from the beginning of the day, it was nowhere near that $92 level. Let's take a look finally at the financials. This market remains the weakest, of course. This is the group that failed to get above that 50-day moving average. The 50-day moving average is still declining. Now we're back down to that $11.50 level. The market basically got sold off right into the end of the day here. There was a rumor of Lehman Brothers and Morgan Stanley, I think, something like that, merging. The market tried to rally, but then sellers came back in right at the end of the day, and you saw that it had a tough time with this 1181. I think was the level it was having a hard time with. throughout the day, and it just it failed to get above it. The market, the financials are basically broken. They've retraced that more than 2/3 retracement, and that gives us a strong reason for concern that this bigger level may give way. And if this level gives way, then we could be in for a quick little washout trade to the downside. It remains very dangerous. The Russell 2000, let's take a look in here on the daily time frame above the 20 and 50-day moving average. We've come pretty far. We've had these higher highs and higher lows. This is going to be a very important level. It's pretty far down there at 45.5 though. That's near here. But we've got these. What we had in here was this level of support broken, and we couldn't get back above there. Let's take a look at the 10-minute time frame. It's a little bit more clear here that the lows from Wednesday acted as the resistance in here today, and I pointed that out in the live event that this was one of my bigger reasons for concern, is that what has been the strongest group, the Russell 2000, tagged the 5-day moving average yesterday. 5-day moving average is declining. It couldn't get above this prior support. That support became resistance, and then on the 1-minute time frame, we saw that this market was actually weaker before the rest of the markets, and then obviously we just caved in. Next week will be an interesting week. We've got options expiration. We've got a very dangerous market still here. You've got to be very quick.